the M&A analysis. A report by the American professional services company Towers Watson shows this. Acquirers have outperformed the global MSCI index this quarter. Breaking it down by region, Asia-Pacific and European buyers outperformed those in the United States over the same period. And this quarter saw a similar number of global deals to last year. For more on this, let's talk to M&A advisor Stephen Allan. He's head of the European division at Towers Watson. A very good morning to you. I thought it was very interesting. Those companies which have been involved in M&A this quarter have outperformed those which haven't. Why is that, and what sort of scale are we talking about?
Well, we've been doing this study every quarter for the last 15 quarters at Towers Watson, and we've shown pretty much consistently over 13 out of those 15 quarters that companies who actually complete deals do outperform the market. So what we're seeing is companies who have a growth strategy, who can execute, are actually being rewarded by the market. So it's actually consistent news from our point of view.
And is this across the board, or are some industries, some sectors doing better than others as far as that's concerned?
Well, this quarter I think it was energy and power and materials have outperformed. But in general, of the nine sectors where there was sufficient data for us to have a point of view, 8 of those 9 showed outperformance. So pretty much we are seeing consistently companies who can complete deals do outperform.
And it's interesting as well, as we're coming to the end of the third quarter, Asia-Pacific and European acquirers have outperformed their United States counterparts. Why more of a poor performance in the States?
Well, there's numbers and there's numbers. The issue for the Americans, that the Europeans and the Asians have outperformed. The Americans tend actually to be more consistent, less volatility, whereas the Asians and Europeans, some quarters it's significant outperformance. But I think if we look at the Europeans and Asians, we see a higher proportion of cross-border deals, cross-regional and cross-sector. So again, that's the market saying companies that are bold, that have a growth strategy, and again, they can execute it, because this study is looking at completed deals, are being rewarded.
And those cross-border deals that you just mentioned, are they clearly more complicated to carry out? And maybe you've got to be fast and bold in this market. Have you seen those dropping off, notably in Europe? The trend there has changed, or has companies' attitudes changed in these difficult times?
I think what we're seeing is companies taking more care. The area where we specialise, we advise on the HR side of the business, so how to get value from the people. Clearly, cross-border deals, there's a lot of challenges. How do you integrate a workforce that's in multiple countries, in multiple regions? We see companies taking much more care over that.
And you've got good pricing opportunities out there now, Odison. You know, when you look at the stock markets at the moment, people say, well, there are bargains out there. Are there pretty good buying opportunities actually on the horizon? Are there deals that you can see and you think, you know what, if they do this well, that will be a biggie?
Well, exactly, and we are seeing the companies who can complete deals quickly are typically more successful and those can take longer, which is really saying if you have the cash, if you have the financing, if it's a good deal and you can complete the diligence and the integration planning quickly, the market will reward that.
Okay, Stephen Allan from Towers Watson, I'm grateful to you. Thank you very much.
Thank you very much.